Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Wednesday, the 13th of November. I'm Daniel Lam, your host for the podcast. One of the misunderstandings of us chess players is that many believe we're very long-term and strategical. In fact, a lot of that depends upon the openings that we choose. In the calmer openings, you may reasonably predict what is the game that lies ahead over the longer term. But in the more tactical openings, you'll be doing really well if you can foresee only a few moves ahead. Now, I believe the markets will become much more tactical or short-term oriented over the next 4 years. Because the first Trump administration taught us that uncertainty is the only certainty when it comes to policies over the next 4 years. Now, focusing our task at hand, November and December are usually the environment for momentum trades and trending narratives to do well. We can be reasonably confident that the Trump trades are likely to continue in the near term. If you want to dig deeper by mapping the positioning of where these trades stand today compared to prior Trump-related episodes such as the November 2016 election, the Tax Cuts and Jobs Act in 2017, and the 2019 tariff announcements, then the broader U.S. equities and the U.S. small cap trades still have legs, while the positioning appears to be more filled for U.S. financials and short U.S. treasuries. Now, looking at the first quarter of next year, the narrative may move to a different gear, with investors looking deeper into how Trump's policies would be affecting growth and inflation. Now, in terms of growth, it is worth remembering that back in 2017, the corporate income taxes went down from 35% to 21%. But the starting and potential endpoints this time is very different, because street analysts have already priced in a continuation of this Tax Cut and Jobs Act corporate tax rate, and that the magnitude of reduction would be less than back in 2017, with some looking at the reduction to 15%. Now, on the other hand, perhaps the inflationary risk from Trump 2.0 is less than what was feared. Now, according to many surveys, inflation was the single most important issue amongst voters in 2024, even relative to history. So therefore, the tariffs that markets were pricing in may be the starting point of negotiation rather than the end points. So all in all, we believe there is more legs for US equities to outperform equities from the rest of the world for the remaining time of this year. And we shall keep you informed of our thoughts as we move along. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.